when you say this time is different, which is sort of what I'm saying, you have to say why. And I think what separates this moment from the last cycle and the cycle before and the cycle before that is we have two whys. The whys are institutions are allocating, they control most of the money in the world, and they move slower than retail. And then the whys are, for the last 6 months, we've been on a new regulatory journey that opened up the market in enormous ways. And if you go back to the last cycle, what was the why? We have DeFi. Like, that's not as powerful a why as the largest investors in the world are now allocating to crypto in size to the tune of like $40 billion a year in ETFs. Or we now have crypto regulation that lets Wall Street interact with crypto. Those are much bigger whys than we have DeFi, or we had ICOs and Ethereum, which was like the last cycle why.
A very retail driven cycle.
Yeah. You know, the first cycle was people can buy Bitcoin. That was a big thing. We just learned, and then we had the 4-year cycle after Mt. Gox blew up. But the last two, there wasn't a reason to expect it's different. I do think this time there are those two reasons, which institutional purchases and regulation. And I just think those are very big factors.